Hi, everyone. My name is David Kosmin, and I'm the creator of TimingResearch.com. This is the Crowd Forecast News show for September 18th, 2017, where we will discuss the 208th weekly report, which you should be seeing on your screen while I'm talking now. But you can go to TimingResearch.com to download the full PDF if you haven't yet. For those of you watching live, you can use the live chat section of the YouTube page where you can comment or ask questions, and we'll talk about those if anything comes through. I have Matt Buckley back to host today, so I'm going to go ahead and turn it over to him.
Awesome, David. Thanks for having me. I appreciate it. I'm alive and well here, folks, coming to you from beautiful Boca Raton, Florida, which obviously is also known as God's waiting room. There are still people around here that don't have power, which is absolutely incredible. Week and a half after the hurricane hit, actually the hurricane didn't even hit down here. It was technically a tropical storm. The West Coast got it a lot worse than we did. So after a tropical storm, for folks, this was turned into Planet of the Apes down here. So just be ready, folks. I'm not talking about a hurricane. For as anything else, natural disaster or any sort of EMP pulse or something that an enemy does to us, it is going to get ugly after seeing what happened here. But nonetheless, we have a lot of things to talk about, specifically impacting the market, whether it's hurricanes, North Korea, an unwinding of the Fed balance sheet here pretty soon, or earnings coming on tap, or a VIX that has been smashed to about a 9 today. It's just absolutely, it's crazy. But fired up to be back here and to be airborne. We have Christian Fromhertz from Tribeca Trade Group. He's joining us. Simon Klein from Trade Smart 4X, the number 4.com. Neil's having some tech issues, so he might, I think he might have bailed out there from Trader Review. And then obviously AJ Brown from Trading Trainer. So Christian, Simon, and AJ, we'll use that batting order for the rest of our time together today. Why don't you do me a favor, Christian, kick us off with a little bit of an executive summary about yourself, your background, and what you do at Tribeca Trade Group.
Yeah, sure. Thanks, Matt. And thanks as well, David, for having me on again. Always appreciate being a part of the panel. So so I am the CEO and founder of the Tribeca Trade Group. Just, quick background. I was an institutional trader at Merrill Lynch for a long time. I was a senior ETF trader. I was a director over there. And really what that kind of allowed me to do, and my approach to the markets is more of a top-down approach. So I look at macro first. So I look at kind of everything that's going on around the world, and really that helps me, in the market that we've got right now. It's, international equities are really outperforming. So, I try to spot these trends. I consider myself as well a trend trader. So, we've really spotted the trend of international equities outperforming US this year. So I've taken that macro approach, and what I've done, in my experience, and I started Tribeca Trade Group about a year and a half ago. And we have an online trading room where every day what we do is we read the tape. We look for trade ideas, and we do that by looking for aggressive option activity. And again, it's mostly trade ideas. We follow a lot of the trades that we see on the tape, but I'm always looking for where the buyers are showing up, or if they're actually getting out of positions. So option flow really helps us identify what's going on in the tape. Something like, for example, today, like they're just crazy buying all kinds of small tech names today. Not so much the large tech names, but really the small little names are being bought up like crazy today. So there's a lot of risk. People are still taking risk. Going into, I know we have a Fed meeting later in this week, but so that really helps us identify what's going on in the tape. And so what we do is, at Tribeca Trade Group is we have an online trading room where we do these trades. So it's, on a daily basis. It's good for part-time and full-time traders. So I'll give you more details later. But again, thanks for having me on the panel for today.
You bet, Christian. Welcome. Good to work with you again. Again, guy after my own heart there who trades, who takes a look at options flows, is a very smart guy, man. It's like the was it the little remora fish swimming along with the shark there? A lot of people don't recognize that options flow can predict, can potentially predict what's about to happen in the stock. A lot of unusual options activity. It bubbles up there first before you see it reflected in the stock. Well, and especially if you're an Equifax executive and you get out of your stock before they release the bad news there. So we'll make sure those people go to jail. Okay, Simon, you're up next, man. Give us that executive summary.
Hi, it's great to be back again with you. And thanks, David, again for having me on the show. Okay, so I've been trading professionally for just over 12 years. I started my professional life straight out of university working for Credit Suisse in both London and New York. And then I moved to generic trading in Philadelphia in 2005 and traded for them. And I started TradeSmart off a number of years ago and started TradeSmartForex.com about 2.5 years ago. With the name of, I was basically not on the internet beforehand, but people came to me privately for coaching. I coach some institutional traders as well who work in both, I guess, in London, in the city, and also in Wall Street. So basically what we do is we take people through the whole journey from beginner trader all the way through to master trader. And we teach them how to read the markets. And what I do differently is probably to most other people in the industry is I teach people a framework for reading the charts very simply based on primarily reading pivot analysis and supply demand and price direction in multiple time frames. And within that, you can develop your own strategies. So that's what we do. And the next part of the training will take people through how to actually run a trading business step by step, the framework and the process. And then we actually work one-on-one with each one of our traders to develop their own personalized trading plan that fits their personality and lifestyle, because everyone's different. And we also have at the end of all that training, we have a live trading room where people can come and trade with us live every day. And actually, one of the newest traders we have last month, we only traded 3 weeks in August, and there was a woman who's trading with us up 25%. She sent me a message afterwards saying, I said, what's she doing? I want to follow what she's doing, So she was following us and she made about 25% return in 3 weeks of August, which is pretty outstanding. I don't think without risking more than 1% on any trade. I mean, she was holding trades for like big moves. So that's basically what we do.
Awesome, Simon. Appreciate it. And AJ, your executive summary.
AJ, you're muted.
Yeah, I am. I was making so much background noise, I wanted to make sure I was quiet. Hey, this is AJ Brown, and I've been around since 1997 trading the options and equities markets. We started Trading Trainer in 2003, and we've been training traders ever since. The unique claim to fame we have, of course, is we started a nonprofit training for inner city kids shortly before we started Trading Trainer. And when I realized it's hard to run a nonprofit if you don't have an investment money to create kind of like that golden egg. So we created Trading Trainer, and therefore we donate all of our profits to our nonprofit. We've got a partnership with the CBOE up in Chicago. We're bringing lots of Chicago inner city kids in there. And so that means that, of course, I have to trade full time. A lot of educators out there realize they can make more money teaching you and charging you money than trading themselves. Each one of my coaches, we all have to trade ourselves in order to keep ourselves supported, because we all know that when you work for Trading Trainer, you're giving up all your education proceeds to the nonprofit I created. Our latest program is the 6% protocol, where we're focusing on doubling our portfolios every year through options and equity trader, focusing heavily on trading the premium that's available in options, the easy way to do it. But we've got a lot of other programs that we've been doing over the last 15 years, and that's my executive summary.
Awesome. Appreciate it, AJ. All right, guys, let's head over to the report. Let me pull that up real quick. David will have it on the screen as well. And we'll go with our question one, Christian. From this morning's open, until Friday's close, which direction do you think the S&P 500 is going to close by Friday? Are we going to close higher or lower than we have this morning?
Yeah, sure. Well, we've got a couple big events this week, so I know this is not the give your reasonings yet, but I would say, I would say up, but I would really say 50%, and I'll kind of over the next question, I'll give more of my reasoning behind why I really don't have that much conviction in the S&P plus or minus this week. So I'm going to say up 50%. I could also say down 50%. It really doesn't. I really don't have a strong feel for this week, and again, I'll go into that in the next segment.
Awesome. Okay, Simon, up or down by Friday?
Pretty much the same. I would say probably more on the upside. I'd say up first, but 50-50. And again, I'll go into the reason in the next section.
Awesome. And AJ?
We're definitely watching it go up, but I have to say I have no confidence in it as well. So I'd say I'm a 50% confident that it'll go up versus down.
Wow, that's all absolute agreement there, and which is great getting to be the host and going last. Real quick, somebody typed, I forgot me. I did forget me. Folks, real quick, my name is Matthew Buckley. My call sign's Whiz. I know all of my weekly options members are in here because we usually do our weekly options live trade brief every Monday at 1 o'clock. So welcome aboard, guys. You can call me Whiz. That's my call sign. I flew the Hornet for 15 years for the United States Navy and graduated from Top Gun Options, and I've been trading equity options before Al Gore invented the internet. Got off active duty, somehow got picked up on the radar of one of the largest volatility arbitrage equity options trading firms in the world, named Peak 6 Investments, headquartered right there in the beautiful Chicago Board of Trade. Did that for a while, quickly learned that Chicago winners are best learned. You can keep them. So that's why I'm down here in beautiful Florida. And for all the people that are about to say, oh, well, hurricanes, I've lived down here for 7 years, had one. I'll rather take that than a February walk from Union Station to the Board of Trade, which is a survival situation. So I'm going to go for a run on the beach here in a little bit. So that's me. Which direction is the market going to go by Friday? It is going down, and I have a 71.08% probability of that occurring. Why? Because I'm as soon as I get done on this webinar, I'm going to send out a weekly options alert because I do believe that, and I'll get into my reasons for a second. So I'm a 0.7 delta to the downside. And did I come up with that number? Nope. That's the number using the at-the-money volatility of the SPX bear call spread I'm going to look at, and we'll talk out here in a couple minutes. Okay, guys, so we got 3 50-50 coin flips and me with a 0.7 delta to the downside. And if anything, I might actually leg into an iron condor because I think, as you guys do, I think we're just going to kind of remain flat. So, Christian, let's go back to you then, man. You gave us your confidence. So give us what's on your radar for the week and why you think it's going to go higher.
Yeah, sure. And yeah, I like that very precise delta 70 move to the downside. I do think that during this week we could get some fluctuations, between the Fed meeting, which I think is the most important event for the week. I do think that we could get maybe a day or two where we slide a little bit, but then I think by the end of the week we could get bought up again. So I think at this point I don't think that the overall indices are overbought by any means. I don't think the Qs, you look at what the Qs are doing today, it just looks like not necessarily a daily rotation, but it's just different areas of the market that are just picking up. For example, you look at the FANG stocks today. They're doing absolutely nothing today. I think the majority of them, last time I looked about an hour ago, they were down. So it's just different stocks. And what I've got up is implied correlation, which is why I really haven't been overly concerned with what the S&P does on a day-to-day basis, because it's really been about a stock picker's market, which doesn't necessarily mean that means it's easy to make money in the stock market, but you've got implied correlation here at multi-year lows. So, I mean, you look at the S&P, which is up about 20 basis points today, and it could be down 20 basis down 20 basis points tomorrow and up 20 basis points, because it really depends on what the functioning sectors are doing. And right now I see up 25 basis points, which is a little bit delayed because I'm using Bloomberg Excel functions. But it's the financials that are up today, the industrials, the materials, and then you've got utilities, which are down a lot. And this could flip flop, towards the end of the week after the Fed meeting. But so that kind of goes back to my reasoning why it just doesn't matter to me what the S&P does. I think there's some really good signals going on in individual groups that I think are going to continue to outperform. So a little bit of a change up of an answer, as I usually give a reasoning, what the S&P is going to do, but I just don't think it matters with implied correlations so low what the overall index does. It really depends on what individual names that you're in, which are going to dictate your portfolio performance.
It's a great point. Christian, any insight on what you think the Fed says or does? Obviously, it's a press conference one, as many folks know. What is it? Half the Fed, after the Fed meetings, it's a press release. Half of them, it's a press conference where she actually sits there and gets,
yeah, sure.
softballs by Steve Leisman. But what do you think is going to come out of this one?
I mean, I think everybody's looking for guidance, right? I mean, so there's no chance of a September rate hike that's coming. It's almost 0.0%, which I love to say. But
it's Mr. Blutarski's grade point average at Faber College.
Whenever I could throw that reference in, I do my best.
Exactly.
But really what's ticked up here is December. So about a week ago, before we had the inflation data, before PPI and before CPI, it was about a 38% chance of a rate hike. So it's jumped up to about a 50%. So really it depends. I mean, I think the unknown is first of all, if they're going to go ahead and raise rates for December, that's prominent. And then number two, what they're going to do with this balance sheet that they keep alluding to, that they have to reduce, but really haven't put an action plan behind it. So I do think that we could get some volatility around that if they start to really, put some definitive plan, which I think they're going to have to, right? I mean, I don't think that they can dance around this too much longer without saying how they're going to reduce the balance sheet. So I think we're due for a little bit of a shock. And, I think putting on some type of a SPY hedge or, looking at the gold miners a little bit, which we saw a big call buyer on Friday in the gold miners, which usually, they don't usually buy these the day of the Fed meeting or the day before, but, usually we see this a couple of days beforehand. So I mean, I like the gold miners as a Fed type trade for if they actually come in and say that they're going to do something legitimate, either in regard to the interest rates or just in regard to the balance sheet reduction.
Awesome. Couldn't agree more. Simon, how about you? What's on your short-term radar for the week?
Okay, so if we look at, you see my charts?
Yes.
Showing the screen. Okay, so we're back to this again. We're still uptrending here on the monthly chart for the E-minis. This is the S&P 500 futures. And I think we're likely to go up to this 2,600 area over here, more like a measure move. It kind of paused here, and I said this last time, likely to go up to this level, and we're kind of uptrending again on the kind of still moving up on the weekly chart, and we just broke to new highs last week, I think, and so there's no overhead kind of supply, and as I said last time, the market will likely keep moving until the trend changes, and the trend's still up on the bigger time frames. So, keep going up until we get either a climactic move to the upside, a sudden surge, which would mark the end of the move, or a trend change. So that's the reason why. But what we're going to do this week, well, we could have another pullback just like we had on these weeks, because we're kind of made new highs now. So we may be due for a pullback. So as you said, we could actually go down this week. So that's why.
Well, it's interesting. So I mean, if you look at the 50-day moving average on the S&P 500, it seems like every event year to date that's caused us to freak out, whether it's the infamous Comey memo or a Fire and Fury or any of that stuff, the snapback through the 50-day, the rip your face off rally through the 50-day moving average usually eventually runs out of airspeed a little bit. We get hypoxic up at that altitude, we level off, and then wait for the next either freak the market the hell out or buy moment. So it does feel a little bit like we're starting to get up in some rarefied air here, even though the underlying fundamentals haven't changed. So yep, I'll agree with that. AJ, how about you, my friend? What's on your short-term radar for the week?
Absolutely. Let me share my screen here. All right. So exactly what I'm going to pretty much be echoing a lot of what folks are saying, although I always teach my traders to use leading indicators to look for lagging indicators, right? And if in doubt, sell time premium. So that's where I'm at. I'm seeing a lot of leading indicators. We go through these moments of range contraction and then range expansion, range contraction. And every time we have a range contraction, we make a decision whether we're going to go up or down next. And of course, here I've overlaid the VIX so we can see that this is incredibly low. I don't know if anybody's ever done this little exercise lately, but if you go out to the beginning of time, we're at, as you pointed out, Matt, we're at VIX levels that the only time we've ever seen them is right before a big downturn. And of course, we've got HSBC, we've got Citigroup, we've got and all those people forecasting downturns this fall. Will it happen this week? I'm not worried about that, and I'm also not so much worried as much as I used to be about the Federal Open Market Committee meeting. Yes, there's been kind of a buildup of talk around how are we going to unravel quantitative easing? How are we going to continue to raise interest rates? Inflation's not even on the radar right now, and as we know, there's no chance that anything's going to be happening. So I'm not even concerned that that's going to even put a blip on this week's. But I've been watching basically what the Twitter does, because that seems to have more effect on the market now than monetary policy. So all to say, I'm doing exactly as you mentioned, legging into different time premium trades as the market just goes either side. And I do like the idea of looking at individual sectors, because that's where the moves are meant to be. But my immediate, as far as this week goes on the S&P 500, I'm not even interested. So 50-50 is where I stand.
Okay. Sounds good. No arguments there. And AJ bringing up the point that, VIX down at 9 here. I talked to my TGO members about, a so-called resting heart rate. The VIX is just, it's ridiculously cheap here. Let me just bring up let me hide this order ticket real quick. The VIX, folks, it tends to revert to its mean. Of course, if you watch Comedy Central, the Gulf and all that stuff. A couple things as this spinning wheel of death is on the screen here. You're not actually trading the VIX when you trade the VIX, if that makes sense. You're trading futures on the VIX, 30 days out S&P call option. So it's not necessarily the spot VIX. Regardless, let me open a 6-month chart here. So the VIX, folks, look at this. The resting heart rate has been lately about, maybe a 10.5. Let's just say an 11 here. We're down here at, oops, let me just finish that. We're down here at 9. This is like it's dead resting heart rate. This right here, guys, is telling me the market is pricing in the next 30 days, nothing happening to freak it the hell out, which is, put this down. When vol is cheap, you buy it. You buy it with both hands. When it's expensive, you sell it. You sell it with both hands. We can tie a specific event, looking at the left side of this chart here, to the market imploding. Here's that infamous Comey memo. Remember the one day everybody thought Jim Comey was a Boy Scout and Trump impeachment, and then 24 hours later we figure out the guy's a felon, most likely. Market recovers. Fire and fury. Then this pullback right here was, oh my God, Steve Mnuchin and Gary Kahn might leave, the Trump because he's an avowed Nazi and racist. No, he's not. So every one of these have been and it's already aged off the radar, if you can believe that. But right around here would be the idiot Republicans' inability to repeal Obamacare under a Republican president. Everybody remember when the market imploded on that, because the market said, holy crap, if this guy can't even get health care or repeal Obamacare, tax reform's in danger. So folks, when you see a VIX at 9, I know I'm going on a VIX rant here, I have to, when I see this, it's stupid cheap. As my members know, I've been predicting in October implosion. I think, you know, we kicked the whole Trump outflanked Republicans, if that's possible, by doing a debt deal with Chuck and what's it, Nancy, he calls her. So the whole, oh my God, we're going to have a debt ceiling debacle in October went away. But we do have a holy crap North Korea. I think Trump's got about 30 days left in him before something happens, folks, whether it's a full-on trade war with China or a full-on war, which would be absolutely horrific. So I've been telling my members October SPY, SPX puts and longs VIX calls, just because VIX is stupid cheap, and we can talk about more of this later. Sorry about the rant, but AJ had a great point. On my radar this week, guys, you really obviously we brought it up, the Fed meeting on Wednesday. You know, our FOMC economic crude oil inventory. Oil really hasn't been hitting the markets that much lately. One of my Whizisms is the market only cares when it cares, meaning nobody cares about oil going down or up unless it does it a lot, and then all of a sudden CNBC's talking about it. But we'll see what Nancy or what's her name, Janet, has to say at on Wednesday. Obviously, she is going to talk about the balance sheet. She's going to get some questions on that, as it was already more or less said. There's a Blutarski chance of an interest rate increase at this one, but the CPI came in a little hot last week, folks, which means that she might have some air support to potentially get an interest rate increase on the board before the buzzer sounds in December. So we'll see. Everything else, what else? Some housing stuff, yada, yada, yada. Nothing really on the radar this week, guys, macroeconomic wise, in my opinion, that's going to cause us to have a rip your face off rally. Like I was talking with Simon, each one of these snapbacks through the 50-day moving average runs out of airspeed. It levels off, it runs out of volume, kind of runs out of airspeed, and hovers waiting for the next what? Holy crap, holy crap, holy crap, holy crap, holy crap. So I think that's why I literally just sent out a text alert as I was listening to you guys. I sent out that what was it, 25.15, 25.20 bear call spread, and I'm most likely going to leg into an iron condor, because I think we'll probably hold maybe that 2,500, 24.95-ish. So a lot on the radar for the week, but nothing really super market moving in my opinion. So okay, let me get back to my screen here. Any thoughts, comments, oh by the ways, on what I had to say, Christian, Simon, or AJ, before we move on? Okay, cool. All right, so question number was it 4 now? Where's my survey here? Or John or David, can you actually scroll down? There you go. Oh, that's right. It's this is an interesting one, folks. Question number 4 is, it's being reported that, I'll never call it Alphabet since I lost money on a trade around that, it will always be known as Google, might make an investment in Lyft. Christian, do you think this deal's actually going to happen from what you heard?
Well, it's it's definitely an interesting question. We've kind of watched both Google and Amazon stocks and their recent price activity, and it's not to say that it's been bad. They just really haven't been floating around too much. So, do I think that they could buy them? Sure, absolutely. And it seems like a lot of the deals that we've been seeing, there's been very little IPOs that we've had in 2017. And it seems like it's because the really good, interesting companies are being snatched up before they go public. So do I think it could happen? Sure. I mean, they're sitting on so much, as well as a couple of other companies that are sitting on so much cash. My personal opinion, which I think is outside of this question, but between Uber and Lyft, these companies are really changing. They're disruptors, right? I mean, so yeah, I think they could be bought by one of these top companies. Maybe it's Google. Personally, I live around the New York City area, so I use Lyft and Uber just incredibly a lot. It's so easy to get, to make a reservation and have them pick you up. It's just so much easier than it used to be to get around the city. Plus, not having to worry about drinking and driving and so forth. So, I think these are great companies, and I wouldn't be surprised if they never get to go actually public, because someone who's just sitting on a pile of cash, like Google, like Apple, could definitely take them out, because they've got the cash to do it.
Yeah, what's interesting is I'm drawn to Amazon here, because really, who was it? Rockefeller? Who's the dude that he said, why do I just own the oil wells? Why don't I buy the rails, the railroad, the lumber? Yeah, Rockefeller, Carnegie, one of those guys. I think Amazon's the same way. I read, 6-8 months ago, that he bought 5 Airbuses. He's like, why the hell do I need FedEx? Why am I paying these guys to ship my stuff when I can own that? So I think, Christian, you make some pretty good points there, that these companies, and that's why I think this whole Trump tax reform thing's huge. When you look at an Apple that's got $270 quadrillion stashed in County Cork, Ireland, because God forbid they bring that home, because it gets cut in half, and because of I'm not even going to get into the politics. So that's a great point. Well, I'll get to what I think about this deal, but Simon, what are you thinking about the Google Lyft potential lash up?
It's an interesting question. I'm not sure. They definitely have the money to buy it or to fund them. So whether it goes through or not, I don't know.
Yeah, well, AJ, how about you?
I got a couple of thoughts about this, and of course, I don't know anything about the future. I don't have a crystal ball, but right now, when tax reform is, nobody knows, because of exactly the points you made. Can we actually get anything legislation done, even with what's happening now? When you don't have a playing field, and a lot of companies don't know what their healthcare costs are going to be for the next 3 years, they don't know what their taxes are going to be for the next year, they are very hesitant to invest in anything new infrastructure, new employees. And so you see a lot of cash being hoarded. Then you start to see buybacks. Right, that's what generally happens when people are unsure and they have a lot of cash. They'll buy back their shares. But then you also see acquisitions, and you see acquisitions that make sense. Google has been working forever on driverless cars. Uber's been talking about driverless cars. I think that Lyft is the way to get the driverless cars out there already. And I think that it is good for both companies. I don't know if the powers that be at Lyft, they've got a mission that's a little bit more nice. I mean, it's a little less market-driven and more social-driven. I'm not sure if their folks would see the great benefits to both companies, but it is, and I hope it goes through.
And well, it's interesting, a lot of us being options traders here, if you think something like this is going to go through, after you do your due diligence, you don't just listen to us, you go out there. I mean, there's an internet, that's why Google exists, and do your own due diligence. Go buy some calls. I mean, that's, the safest quote. I hate using the term bet, when we're talking about investing, but if you think something like this is going to happen, knock yourself out. I will caution you that there is a graveyard full of potential tech or massive conglomerate tie-ups here, and one of them is Twitter. I mean, it literally is a dead horse lying in the corner about how many companies were just going to buy up Twitter. I think that talk started 5 years ago. Disney will buy Twitter, Apple will buy Twitter, Google will buy Twitter. Twitter's sitting there, sucks. And if you can't, it's the main form of communication for the leader of the free world. And the thing ain't getting bought, and it's still sitting there languishing. So always be careful about these, hey, I heard So, somebody might buy somebody over the water cooler, and just, like I said, you can go buy some calls if you got some money. That's the way I view at it. If you think somebody's going to buy somebody, it's almost as fun as you might as well have more fun putting your money on the table and lighting on fire and drinking a bottle of Dom Perignon, because that's probably the same amount of excitement when it doesn't happen. So I'm of the opinion. I don't know. Like AJ said, I don't have a crystal ball. My call sign's Whiz, not Nostradamus. So I don't know. So if I was going to throw some money at it, which I rarely do with these type of rumors on mergers and acquisitions, that's probably what I do. Anything else on that, guys? Around the table real quick. Okay, good. I was just looking over at some questions. So here's what I want to do. Usually when I host, I love trying to get some good trades or some good strategic thought out of you guys before we head out. So Christian, I want to head over to you, my friend. What juicy looking trades are you looking at short term tactically, or anything strategic? What are you looking at Tribeca Trade Group?
Yeah, absolutely. And thanks. Yeah, I like this segment too a lot. I like to talk about trade ideas and what's moving. So I'm actually looking at this one stock right now, which is NTNX. I mean, from a technical aspect, it's starting to break out. So, this is a name that had earnings. A lot of these names that have been reporting earnings, they've had good earnings, and you just have to be patient and just kind of let the fast money just dissipate for a couple days. Usually wait like the 3 or 4 days is normal. And you can see this name. I mean, look at what this name's doing today. It's just absolutely breaking out. So I like this name. It's a $22 stock. I don't even think that you need to really mess with options. With anything under $30, especially anything under $15, I really try to avoid options in. But this one's kind of right in the sweet zone of just maybe buying a little bit of stock. And it's a newer name, NTNX, so it doesn't even have a 200-day moving average. You can see it just starting to form. But I like a long versus the 50-day moving average. I call these easy trades. Anytime that you have support that is so close to you, you can go long, and then make sure you have an alert placed. Maybe use one ATR stop or something like that below a moving average, and just kind of sit long and let the trade work. So I wasn't going to mention this one, but this one has a lot of our members, taking note of this name today. Another kind of, small name, which we've just seen repetitive call buying in, is Splunk. This is a name that a lot of people like, and it's just been one after another with just aggressive call buying. And, it's one of these things where we saw a lot of call buying for the expiration month of September a couple months ago, and the stock really didn't do much. You can see it's kind of a sideways looking stock, but we keep seeing aggressive call activity in the name. So if it happens to hold here, I started a position in this today, and we just continue to see. When I say aggressive, it's institutions that are going, and they're basically they're lifting the offer, and they're going out on all exchanges and buying, which is, when I used to trade blocks, when I used to make markets for institutions, when there was an aggressive buyer, that's basically how they would want to get it done. So when you see things that are being repetitively being bought above the offer in options, I don't know what's going on in this name, but it certainly had a real nice, they were right the first time around when they were buying the September options. You just had to be patient through some chop, and the stock took off on options from about $59 to 66, but they're reloading and they're buying a lot of October options. So I don't like to mess with that short-term option flow. So I went out to January and I bought a call spread, especially names that have a little bit of high volatility to them, where the options are going to be expensive. I just kind of turn it into a different strategy and try to do it call spreads, and then kind of look for that measured move of where I think the stock's going to go to, which I'm looking at the previous high, which is around 77. So I put on the 77 and a half call spread going out to January, giving myself plenty of time. And then just finally, because I know, like I said, I like to talk about trade ideas. That's interesting, right? So SCCO, this is a copper name. We've watched copper break out about a month ago, right? Really, really strong in copper, looking at a daily chart. And it got a little bit too ahead of itself. So, it's come in, and it's come in right to some support. So it is up today, perfect support down at the 50-day moving average. One of the stronger names that I've seen in this group, which is a copper miner, it's kind of doing the same thing, kind of mirroring copper very well. So again, this one is an easy one because you know exactly where you should get out of this trade, which is right around the 50-day moving average. So it's not easy finding things that have kind of come in a little bit from raging. So one of my favorite trades is to buy dips and uptrends, and I see a nice dip in a name that's uptrending, which is this SCCO. And that's it. I can go on, but I'll
that's awesome. Real quickly, since I know you're an options guy, what's your take on volatility here and the VIX?
Yeah, sure. So I, that was really a couple great points that you mentioned earlier about the VIX, and I'm under the same mindset. Like I don't really trade the VIX that much, but I think as a number of you already mentioned that you kind of use leading indicators or just indicators, and yeah, I mean I think the VIX, getting back to this crazy 10 level, which we've seen this, and you're absolutely right. Unfortunately, going from May to June, we stayed at this ridiculous level for a while. So do I think we can get another one of these spikes? Absolutely. Am I going to try to time it? No, not necessarily. I think it is just ridiculous how low we are, given that we do have a Fed event this week. So I would expect, just as you were saying, I would expect volatility to increase going into the Fed meeting. I think I feel much more comfortable, and probably you do the same, when things are not as calm as possibly a 9 handle. Come on,
yeah.
You got to be kidding me, right? So I think you have to be a little bit careful whenever you see it and kind of pare back a little bit of your risk. So don't get me wrong, I've got a couple trade ideas, but I'm not like all out 100% invested. I think it's good to kind of keep some money back, keep some on the sidelines, and wait. Who knows? I don't know what the next spike in the VIX is. Could be something that Yellen says. Could be something that our buddy over in North Korea, who's got a little itchy trigger finger and
Rocket Man.
Rocket doesn't like when he doesn't get a lot of attention for a couple weeks. So I mean, who knows? It could be one of these events. It could be something that none of us know about that could cause us to kind of get a little bit of a spike, and then we comes to grips with that volatility event, and then we continue to trend up.
It's a great point. I mean, being short vol all year has been a great trade until those massive implosions, that happen in the blink of an eye. As you guys know, the VIX can go up 15, 20, 30% in minutes. So whether it's Rocket Man or something else, or just a Trump tweet, there's something out there, folks. I mean, I was in the Chicago Board of Trade, the CBOE, when the VIX hit 80 or 90, whatever the hell it was that day. And the median, I don't know, I failed stats. Whatever it is, the average of the VIX since 93 or whenever it came about is a 20. 20. Folks, we're half that. I'm going to be covering with my members tomorrow and a lot of potential new members about the VIX call option activity, double where we are right now. Well, not even double. Double would be 18. You should see how much call volume and open interest is at the 25, 30. I mean, there are institutions obviously have to hedge, and you would think funds that are called hedge funds would have to hedge. But folks, you take a look at what's going on with the VIX out to October. There's a lot of people betting on something bad happening then, but we can talk about that later. Simon, how about you, my friend? What's on your either short-term or long-term radar as a potential juicy trade?
Okay, so let me share my screen with you again. Just let me know when you can see it.
Yep, you're good.
Okay, actually, let's start with this one. This is one we called out. Actually, I called it out on the show. I think it was with you as well, Matt. We called it out. We said down here to buy the Australian dollar as a long-term trade. Mm-hmm. So this is what we've been in it. We're kind of up at the highs around 400-500 pips or whatever. And, it's today is on a short term was a sell. And that's what we called out in our room to actually short this to the downside, and potentially this may go down back to 0.79 sort of area, which will be just a pullback on a weekly chart. So we're looking maybe to pick this up again as a long-term trade and maybe trade that all the way up. The next stopping area is around here and then potentially up here and higher. So that's one trade we're looking short-term today, short side, long-term trade on the long side. Now, here's another interesting one is the pound. The pound, I think we also called this on a number of months ago to look for a potential long entry, and this happened a number of weeks ago over here, down here, and there's a nice move. Today in our trading room is a short-term short trade, so there's this potential to play this down short-term, but we're looking also as a long-term trade. This may be the start of the move back up for the pound. So it's a nice move the last last week. Really nice move. We pushed down and had these two powerful bars to the upside. Another interesting one today that we called out in our trading room, as on the short side, was to play gold as gold futures on the short side today. And again, this may continue down. I mean, it's a kind of a choppy market, this, and we hit up a supply area above here, and we're currently moving down. We're hitting some demand, so we'll have to see if we go through that, then maybe we continue to the downside. And let's look at one more, another interesting one to look at. Here's an interesting one. Let's put up the yen futures. There's another interesting one. Yen futures, we just broke down. Actually, if we look at this, it's kind of a base over here, and we went above the base and back in. So this has potential, and you can see it's kind of been basing for quite a number of months on the monthly chart. This has potential to go all the way back down to the bottom of this base and potentially lower. So if you've got the yen futures moving on the downside, then the yen pairs, like the euro yen, dollar yen against the yen, will probably have upward pressure. And if we go over now and have a quick look at, say, euro yen, for example, you can see that we have, and this has potential. If it keeps going, we can really move all the way back up again. It's going to move back up here. And if we look at the dollar yen as well, this is one that we called also out long today in the trading room with an entry over here. This is the off the US session. I haven't really done very much, and we do have a problem area we need to get above. But this short term has also potential to move up to this area, and maybe in a medium term up to the top here, and potentially long term even higher. So if the yen keeps falling. So those are things that I'm looking at kind of on a day-to-day basis, and that's what we do in our trading room. We look at ideas that are forming on the bigger time frames and also the shorter time frames. We could be long and short the same in the long-term trade. As I said, we could be long the Australian dollar as a long-term trade, but we can also short it intraday as well. So we play both sides of the market.
Awesome. That brings a smile to my face, man. That's potentially making money either way, man. I love it. AJ, how about you, my friend? Couple juicy trades that you're looking at.
Well, what I've been trading, let me share my screen here. What I've been doing actually for the last 7 months is trading premium against Deutsche Bank. But I'm not doing it the traditional way, which is some people like to buy the underlying symbol, leg into and sell premium every cycle against that by writing some calls. We're actually doing it the other way, writing puts. And that way, if it breaks down to the downside, we're very happy. And that's what we're looking to do, kind of hedging ourselves. In fact, that's what we've been doing pretty much since the beginning of August. And a whole bunch of folks, instead of having to short the stock and then sell the call, which is how you write a covered put, a lot of folks have instead been buying the deep in the money, far out in time. We're talking about 2019 leaps puts, and therefore they're doing it in their tax-free retirement accounts. In other words, it's a diagonal debit spread. It's a cash trade that you can do. And so a lot of folks have been doing that very nicely. But we just got through selling our premium for the month of October about 3 or 4 days ago. And we're very happy with the type of trade. So we look for the kind of quiet trades that just go horizontally channeling for a long time and make sure we know which direction it's going. as far as where do we want to hedge our bets. And by the time our profit zone is the same size as our trade zone, we don't care anymore. It's a difference between our min and our max profits. There's no risk involved. So that's what we try to establish month in and month out. This particular trade on Deutsche Bank, after I think we're in 4 months of cycles, I think we've got about 120% return on invested capital locked in. So we're very happy about that. And our position sizing is about 1/3 of our portfolio on this one trade.
Awesome. I like that, man. That is a good looking try. I actually wrote that one down. All right, guys, let me take you, show you what I'm looking at here. I talked about it earlier. I sent this out to my weekly options members. It's a bear call spread out to Friday on SPX. I trade SPX over SPY. That we can discuss over beer why I do that. Selling 15 of Friday's 25.15 calls. That's saying what? Hey, SPX, I don't think you're going to be above 25.15 by Friday's close. Well, Whiz, you're not Nostradamus. What if you're wrong? Rip your face off, rally. Janet says QE 9's coming, and the market just, goes to the moon. Well, that's going to suck, but I'm going to be hedged because I'm buying 15 of these upside 25-20 calls. This is called a bear call spread. Now, when I sent out the text, I said $1.15 plus or minus 15 cents. It's right at the top edge of me. If it goes any higher than that, I'm not going to get into it. And here's the metrics. Of course, the first place I always look as an options trader is max potential loss. I never look at Mr. Smiley Face first, ever. Why? Because that's stupid.
Yep.
As options traders, as a Hornet pilot, you're always taught to say, how can I get my ass kicked? How much money can I lose? If you're okay, not necessarily okay, like I love potentially losing $5,500. That's not the point. If you're not okay with this, why the hell would you even care what that is? Mm-hmm. The major mistake many retail folks who are watching do right now is look at, and I know John and Pete Najarian very well. They built Trade Monster. They're a lot bigger than I am, so they never listen to me. But I used to give them grief. I'm like, guys, you guys got to put that sad face up here for Whiz, marketing, blah. Oh, got it, guys. But always, if you're not okay with this risk, don't ever look at that. But this isn't that bad of a trade. Then when I can say, you know what, folks, based on a $100,000 model portfolio here at TGO, I have an SOP, a standard operating procedure that says I don't want to risk more than $5,000 on any one trade. Where'd you get 5% from, Whiz? That's after about a quarter of a century doing this. That means I don't get wiped out with one trade. It'll leave a mark, but I'm still alive. So it's a little north of that. I'm okay. I'm the commanding officer and pilot in command of my portfolio. So I'm risking about $5,500 to make maybe about $2,000 even there. And you can see using current at the money volatility, it's around a 60% probability of max profit there. Since I'm looking to leg into an iron condor, I might actually go up to the 25.20, 25.25. It's only about 80 cents there. But the reason I say it's only about 80 cents is, and the risk to reward just is a little, it's because if I put on a bull put spread, it's more or less going to knock that risk in half. So a lot more on this to my members who are listening. I just wanted to share with you guys one of my short-term trades I'm looking at right now. So we should be good to go. All right, guys, got about 6 minutes left, so let's go around the horn. Christian, let everybody know how all the listeners can find out what you do at Tribeca Trade Group, or get a hold of you, or maybe, I don't know, take a test flight into one of your products there.
Yeah, sure. So I was having a little delay there with the mic, but that's okay. So you can find us at TribecaTradeGroup.com. You can take a look at our products page. So my trading right now, and it does change, just like I talked about stock picking right now, which, stocks are at a multi-year, the implied correlations are multi-year lows, but, we change based on what the market is doing. So we do a little bit of day trading. We have day traders in the trading room. So my day trading is about 20% right now versus swing trading, which is about 80%. But you can find us at TribecaTradeGroup.com, and you can get half off the first month. with coupon code TTG. So you could check us out. If you like the type of trade ideas, I mean, that's what I do all day long. I also provide our subscribers with a weekend newsletter, which kind of really looks to spot the trends and finds what's moving, what's not, and then kind of goes in, then dives deep into some single stocks into those sectors. So thanks for having me again on the panel. Love to be on here, and great to hear your ideas as well, especially on, I like that VIX, I like the idea for selling S&P right here for this week. I like that trade a lot, Matt.
Awesome, Christian. I appreciate it, bro. Look forward to working with you again. All right, Simon, how do we get a hold of you or find out what you do at TradeSmart Forex?
Okay, you can see my screen again. I was muted there a second. You can hear me though. Yep.
You got it.
You can go to my website, tradesmartforex.com, and that's with the number 4. And if you want to learn about us, you can, this is probably a good place to start. You can put your email in and your name over here, and you can get a recording of how to build a profitable trading strategy step by step. We'll take you through how you actually do that. So if you've got an idea about how you want to trade, how do you turn that into a strategy that's going to be profitable? What do you do? So you can go and watch that. It's for free. So if you want to join the list, you can join my mailing list and just put your details in there. We have a live trading room, and we also put out a video once a week on Sunday before the market opens on where the dollar's going next. So you can go and watch that. It's pretty accurate on a week by week. We look at what, if the market's going to do this is likely to happen, and you can actually watch it play out. So if you want to join our live trading room, you can do that. You can click over here and it'll take you to this page, and you can start a trial if you want, and you can come and join us and see what we do on a day-to-day basis. We take, we basically meet on once before the week starts on Sunday at the beginning of the week before the markets are open, and we go through a plan for the week. We mark our charts up and get prepared, and then every day we meet before the US Open, the Forex US Open, which is 7:30 a.m. Eastern time, and we prepare to trade. We go through the markets and we have a game plan and we set the trades up, and then we actually trade if there's anything standing up during those times. So feel free to come and join us. And there's a lot of, if you go around the blog on the website, you can go over here to education blog. There's some free videos and different things like that you can go and watch and learn more about what we do. Okay, thank you very much for having me on the show again. It's great to be here.
You bet, Simon. Thanks for coming again. Good working with you. And AJ.
Hey, Matt. I got a link that I set up for everybody here today. And that link is 6pp.today/timing-research. And this is where you guys can get my white papers that I just wrote. I'm really proud of these things. They're going to get published in a couple of different places. One of them is on writing covered puts and writing covered calls. The other one is on just how to do scenario analysis in order to manage your risk. Like you pointed out, managing risk is what it's all about. Count your reward after the trade is closed. So I put these up here in a link. You also get a video series, and you also get my weekly broad market analysis. I don't want to sell anything today. I just want you to get a hold of those white papers and then drop me an email and tell me how good I am.
That's awesome. Awesome, folks. Real easy for me. If you want to find out about what we do here at TGO, as luck would have it, we're actually kicking off one of our industry leading, it's called Full Throttle week. We open the doors this entire week for a full week of live trading and training. It actually kicks off tonight with an in-brief. Obviously military terms here, and in brief at 8 o'clock tonight, and then you're going to get access to all of our trading rooms throughout the week. And I just kind of gave you a free weekly options trade that I literally just sent as a text alert out to my members. Really easy to register for tonight. You head to go.topgunoptions.com/join-FT. That means join Full Throttle. It's all free, and we'll even throw in it's called the OPCL, the Options Pocket Checklist. I never went flying with the F-18 flight manual. I mean, the thing's the size of a phone book, so we squeezed it down into what we call a PCL, a pocket checklist that would fit into our G suit. And we did the same thing with kind of options, all our manuals. We squeezed it down into that OPCL, the Options Pocket Checklist, and we'll also give you a copy of our trade plan as well. So like I said, head to go.topgunoptions.com/join-FT, and that's for Join Full Throttle. Look at that, man, 1,400 hours on the dot, and I am going to say, David, on time, on target. Once again, I'm going to throw it back to you, my friend. So thanks again for having me as host. I appreciate it.
Yeah, thanks everyone. Great show. So just for everyone watching, be sure to hit the YouTube subscribe button if you haven't yet, to make sure to get updates on future shows. Also, be sure to join us for the new Analyze Your Trade show tomorrow night at 9 p.m. Eastern Time. That'll be the 4th episode of this new show that I developed with Dean Jenkins of Follow Me Trades.
It's awesome.
So he's yeah, AJ was on last week, so went well. So Dean is going to be moderating tomorrow night, and also John Netto and Sam Borgi and Neil Batho, if he can get his technical issues worked out. So just want to thank my guests again for this week. Christian Fromhertz of TribecaTradeGroup.com, Simon Klein of TradeSmart4X.com, AJ Brown of TradingTrainer.com, Matt Buckley of TopGunOptions.com, and hopefully we'll have Neil Batho back as well soon. So thanks, everyone.
We'll see you, David. Thank you.
Thanks, David.
Thanks, everybody.